Hi everybody, Alex Deploy here from Expert Forex, and in this video we're going to be talking about an indicator that not only finds the best entry into a trend but also finds the best exit out of a trend. And on your screen you can see some examples of this where there is the entry into the trend. Fantastic. It stays in the trend right until it stops trending over there. Then it re-enters the trend and gets out of the trend over there. Same thing over here. It enters the trend nice and early and exits nice at the point where the market starts going sideways. So fantastic indicator. Let's go and see what it's all about. So in this video, I'm going to explain how the MACD, and that is the indicator we're going to be talking about, works and why it produces the best trend entry and exit signals. I'm going to show you some initial automated MACD trading robot results, and I'm going to show you how you can access the automated set and forget MACD trading robot. And then lastly, I'm going to show you a few of my own secrets that simplifies the MACD trading considerably. Now, just at the bottom of the slide here, we say the MACD stands for Moving Average Convergence and Divergence Indicator. And that's MACD. That's where the MACD gets its name from. So what is convergence and divergence? Let's go and have a look at that. Okay, so let's have a look at the settings for the MACD. The MACD works with a fast EMA and a slow EMA. So those are the two components that it works with, and then it has a signal line, which I'll explain a little bit later. But essentially the drivers are these fast and slow moving averages. And let's go and have a look. On my screen here, I have the two moving averages. In fact, the ones that are shown here, the red one is the 4 moving average, and the blue one is the 13 moving average. And there you can see them on the screen. And as you can see, the signals produced by the MACD have produced fantastic results. And we're going to have a look at a lot more than this. But I just want you to understand how the MACD is created. So what the MACD measures is the distance between the fast moving average and the slow moving average. And that distance can diverge or it can converge. And that's where the secret lies. So what happens is, let's take the situation where both of them are at the same place. So on the next candle, what happens is there's a gap between them, between the fast moving average and the slow moving average, and that is what the MACD measures. So these bars on the MACD measure the distance between the slow moving average and the fast moving average. And how does it do that? Firstly, it takes the slow moving average, that blue line that you see there, and it makes it flat. It flattens it. So the blue line actually becomes this middle line that you see on the MACD. So it flattens it. And then the distance between the red and the blue line becomes the bar that's down here. Because it's actually very difficult to see this with the eye on the chart. So it actually creates bars for you. So there's the bar. So the next one is bigger because that's moving away and that's getting... So the bars get bigger and bigger and bigger and bigger and bigger. And then suddenly they stop what we call diverging. So when the bars are getting bigger, it is diverging. The moving averages are diverging from each other. When it starts getting smaller, they start converging on each other. So over there you can see the gap starts getting smaller, 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 and then eventually they meet. So the MACD measures the divergence and convergence of the moving averages when it's going up and when it's going down. That's all it does. Firstly, let me tell you a story. I went into a trading room about 20 years ago, a financial institution that was trading, and there were about 20 traders on the floor. I walked past every single trader. Every single trader had the MACD on their screen. And very soon after that, I realized why this is such a powerful indicator. Because what they've realized is that conventionally, what traders try and do is they try and trade the crossover, the price crossover over moving averages, and that's one technique of trading. But the MACD indicator has brought a new dimension on that, because what it's actually saying is that while the gap between the indicators, the moving averages, is diverging, it's meaning that the trend is getting stronger and stronger. And when they start converging, it means the trend is actually dying and getting weaker and weaker. And that's when you want to enter your trade. It's not when there's a crossover of the moving average and all that. You want to enter when the trend is getting exhausted. And that is what the MACD indicates. It says, all right, during this phase, this trend is getting strong, and when it starts going down, it's getting exhausted. That's when you should enter. And that is why this one captures the entry of the trend perfectly, but it also then looks at the trend that you've just caught and gives you the same signal to exit. So let's have a look here. So at that point, the MACD got exhausted. We entered the trade there, and then it went down. It converged, and in fact, on the bottom end, here, when it's going down here, it is diverging again, and then there it started converging again. So that's the exit. So it gave a trade entry and a fantastic exit. And can you see the size of the trend? Almost a 300 pip trend that it caught you. Now the same thing happened here. There you can see you can't see the divergence that well, but there you can see how it started converging. That is where you enter, and it just kept on converging and then diverging as it crossed over. And only when it starts crossing, it starts converging again, that's when you exit. So this thing gives you entries and exits. Fantastic, EA. So what is this blue line? This blue line is basically the signal line. So what a lot of traders then do is they don't look at these actual bars. They say when the bars cross over the signal line. So this is a signal line. So let's have a look. So the signal line comes over. You can see over there it hasn't entered yet. It only enters when the bars cross over the signal line. Same thing here. It goes down, 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 and it only enters when the bars cross over the signal line. So that's the purpose of the signal line, and you can make the signal line sensitive, like I've got it there at 4, or you can make it less sensitive if you want to make it 12. The signals will be a little bit later, but safer. So that is how the MACD indicator works. It's a fantastic indicator because of the fact that it gives you the entry and the exit, and it keeps you in the trend. You know, people would say, oh, there, the trend's over, look over there, it's over. No, it says, no, we're still diverging, so stay in it. It's only when the conversion happens over there, when the moving average, when the bars cross over the single line, that you then transact. Okay, so now why am I telling you all this? Because when you buy a robot, you don't want to know all of this stuff. You just want to trade the robot. Now, the secret about robot trading is knowing how your robot trades. And therefore, that knowledge will help you, firstly, discover fantastic settings to use, but it will also help you correct trading that is not working at the moment. So that knowledge is actually critical if you want to become an advanced robot trader. So let's have a look at some more examples, and here's a whole lot of examples. Well, let me go through them one by one. Here you can see, I think this is the one that I just showed you there. The signal line crossed over, that was a signal to buy, and then it kept you in the trend all the way. There's a signal to sell, boom. And then the same thing happened in reverse, so it goes, oh, stay in the trend, stay in the, oh no, get out here because the market is starting to go sideways. And then it says, okay, get in again over there where the signal line crosses over, and then it says, okay, get out and go trade in the other direction over here. And then the same thing again, it keeps you in that trend over there, get you out, put you into the new trend, get you out over here, put you into the new trend, and so on and so on. Here's a good example, get you in there, away you go right down to the bottom, get you out over there. That's a 430 pip trend. Then it gets you into and in fact this is the one that it gets you into the trend over there, goes out and gets you out over there, and that is a 340 pip trend. So now I think you've got a good feel of how the signals work. There are some whipsaw signals that can occur, like here it gets you in and out a little bit too quickly. What you can do there is adjust the blue line if you want, or you can even adjust your settings if you want. But certainly these big trends make the losses of the sideways market a lot less. Now currently we are trading $300 accounts, and as you can see here, all the accounts are nicely positive except these last three, and that's going to be the subject of my next video, where I go in there and I say, okay, how can we change these settings with the knowledge of how the MACD works to be more positive. But on the whole, you can see some really positive. That top one is a $500 account, so it is also nicely positive. Equity is nicely positive. So overall, this is a robust way of trading, and this is the automated MACD trader. And here's the example of the results. You can see the floating profits and losses are tiny, because this one also, the advantage of this one is it trades one trade at a time. You enter and you stay in that trade while it goes up. In fact, it has positive open trades in most cases. In fact, this is a positive one. So this is a fantastic EA for US traders. It hasn't got any FIFO problems, it hasn't got any gearing problems, and it is very successful. Not that, and the win rate at this stage is around about 65%. You can see the peak drawdown very low. So that's what's happening at the moment. We're going to run this for another 3 weeks, and then we're going to introduce these accounts to the linking service, and we're also going to distribute the settings that we will be using in the linking service to owners of the tradable MACD. And here is the tradable MACD web page. A link to this page will be in the description of the video as well as in the commentary of the video. And now we come to the part that is my secret. Now, all of this that I've explained to you may sound very complicated and so on, but I had a look at the trading, and this is the same chart you've seen earlier, and I thought, how can we simplify this? And the simplification is so simple, you're actually going to get a shock. Simplification is, you get the same signals if you focus on the angle of the fastest moving average. So let's have a look at what I'm talking about. So here we go. Here's the fastest moving is the red one. It's coming down. Look at the angle. It's down, and then suddenly it changes the angle. So it's giving the same signal as the MACD is at the bottom. So there, it changes the angles. Then you just enter, and you stay as long as the angle is pointing up. Then it reaches the point and it changes the angle. Same signal as the MACD gives. So you just stay in it while it's pointing down. There changes the signal. Same signal as the MACD. Then it points down again. Same signal. You just follow the signal until it changes. And there it is. It changed and the same signal as the MACD. So there's a simplification on MACD trading. Rather than worrying about the various signals, just trade the moving average angle. That's all you have to do. Anyway, that's a subject for another video, but it does show you that we get blinded by complex things and we don't see the simplicity in some trading techniques. How simple is that? We've gone from a very complicated indicator with all kinds of things to one indicator, a fast moving average, and just trading the angle of that moving average. Now, I hope you've enjoyed this video. I really hope you've learned something about Forex trading and have learned about the opportunities out there, fantastic indicators that there are, the MACD itself, and the simplicity of a moving average angle. As always, links to anything mentioned in this video will be in the first commentary of the video and also in the description of the video. So from me, Alex Deoy, cheerio. Just a reminder to join our expert Forex community of over 30,000 Forex traders. It is free, so don't miss out on any new developments. A link is in the description of the video.